guys want to see what a private party in Las Vegas looks like, check this out. Look at this.
All right, folks, let's keep it really quick here and to the point here today. We're going to look at the Russell 2000, which is really my leading indicator index. There's a lot of things out there to look at, but if I look at the Russell 2000, I see both relative and absolute strength, as we'll see in just a minute. I really can't. It's very difficult for me to be bearish. So the Russell 2000 also, just so you know, is a much better representation of the U.S. economy because most of the Russell 2000 companies actually sell into the U.S. economy. If you compare that to the S&P 500, a lot of those companies have a lot of international exposure. So if the Russell 2000 is ripping or rallying in this case, then the U.S. economy here does likely look fairly okay. So quick big picture point, and you can see the Russell 2000 is now breaking and has been breaking out of a major consolidation phase here that it's been in, and the rally since the election or since the Trump election has been very clear to the upside. We've made a series of higher lows all year this year after really bottoming out. So this low here in the January-February period was a very, very important low indeed. Now, the absolute chart is important. That's this chart. But let's also look at the relative chart. And what you can see is if we divide the Russell 2000 ETF, so the IWM versus the SPY, and I'm just going to make a quick, simple line chart out of this. What you guys will see is that not only the absolute picture has improved, but also the relative picture. And to me, that's very, very important. I want to see the Russell 2000 outperform the S&P 500. That's very important to me. So if we look at it through that lens, and we can see that there's been a series of lower highs taking place since let's call it March of 2014, but now finally that has been overcome. So we now have a series of higher lows being is in progress, I should say. I think that's a very, very important development. And when I look at this kind of chart longer term, I do think this could indeed be something where we see the relative chart as well get back to at least those 2014 highs in a not too distant future. It doesn't have to happen over the next couple of weeks, but I think over the next couple months or quarters, this is indeed something that could happen. Last but not least, let's quickly give you both sides of the coin, though, and I do think the Russell 2000, if I look at the IWM ETF one more time again, this is the ETF of the Russell 2000. I do think near term this is getting extremely, extremely stretched on the upside. So if you look at the MACD, for example, that's a momentum oscillator. This has actually reached an all-time overbought reading, and all-time is a long time. So the Russell 2000 here in the absolute immediate term, I am not looking to chase it, but I'm willing to respect the breakout because the breakout has indeed satisfied or ticked a lot of boxes in my opinion. So Russell 2000 leading, which is also, by the way, a confirmation of a strong dollar. A strong dollar tends to be pretty good for these kind of companies, whereas a strong dollar is not so great for the S&P 500 companies. So Russell 2000, my leading indicator index, is rallying. To me, that is a bullish sign.